Hi everyone, thank you for watching CryptoGo's Experience channel. Today we'll go over basics of technical analysis. Let's get started.
Alright everyone, I have created this slideshow to guide me through the video. Today I would like to talk about the technical analysis, and I am about to cover just the basics of it. So if you are an experienced guy in a TA, this video is not for you. This presentation is for people that are new to this concept and they would like to start a proper investing or trading. So let's start by defining technical analysis. I would define technical analysis as a short-term to mid-term price analysis of an investment, which is made based on price changes, maybe volume changes, order book changes, and some other technical indicators. Technical analysis is used to determine the probable change in prices in the future based on their past evaluation, considering factors that may have an impact on development of their supply and demand. So basically, we are using the historical price performance to determine the future by looking at the trends and indicators. As you may know, the past may not be the greatest indicator of the future performance, but definitely TA is widely used and it helps in making a good investment decision. So technical analysts would consider past price movements, disregarding the outside information or fundamental analysis. I'm not saying this is the best idea, however, this is probably the main assumption here. When I'm doing trading, I would consider TA and also fundamental analysis when I look into technicalities of some cryptocurrency or maybe some information in the news that I know about this cryptocurrency. Basically, coming back to TA, basically people that use technical analysis believe that all the information that is out there is already presented in the price movement. This may sound disturbing and crazy to the early investors. However, the basic assumption of technical analysis is that the demand and supply decide about the asset prices. Even the proponents of fundamental analysis can't argue with this obvious assumption. After all, the law of supply and demand is one of the basic economic laws governing the markets. Basically, by using TA, trader can determine changes in the demand and analyze the current expectation of the future price movement. And if you had basic economics, you may know that the expectations are one of the factors that can influence the demand. Another assumption is that the present value discounts the future. This is basically the same assumption, but let's talk about it. So let's look at some examples. Let's say Apple. If we believe that the revenue of Apple will grow in the next year because they are, creating a new phone or new product, then this information will be already reflected in the current prices, right? You read the news, you are excited about it, so you buy it. By buying it, you basically bump the price up. Let's go over here to the Morningstar and let's look at Tesla. Here we can see that the price to book ratio is 12.0, which means that the current market value is 12 times greater than the book price of all the assets owned by the company. Further, you can notice that Tesla has not generated any profits. By going over to this tab, you can see that, and you see that they haven't generated any profit for the past few years. So now you have a question, why the price is so high? Well, investors are expecting great things from Tesla, and they truly believe in the success of this company in the future. If you had finance classes, you may have heard of dividend discount model or cash flow discount models, which is based on this particular assumption that the current price reflects the future performance. The other key characteristic of a TA is that the TA is self-fulfilling, which means that if I use the same indicators or trends as other investors, we would make very similar decision. If I see that there is a long-term bullish trend, by drawing a trend line, which I will show in just a second, Other guys somewhere else, maybe in, I don't know, New York or LA or Asia, are seeing the same situation, and they are most likely to hold that particular asset for the long term. Okay, so there are two ways of doing TA. You can look at the historical price action by drawing graphical patterns that are giving you some critical information, or by simply drawing a trend. Here I'll just go over basics. I'll not introduce any graphical patterns to you. However, I'll talk about trends. Other is to use indicators, which are just a statistical approach like price moving averages or relative strength index, short RSI. This tells you the current state of an asset price, of an asset, and can be very useful in determination of price trend reversal, like from bullish increasing price action to bearish decreasing price action. I know this may not be clear to you right now, but let's move on and let's introduce candle charts. So you may know the price charts that look like this. Let's go over here to this tab, which is just a line that gives you an information of a closing price in a basis you selected. In this chart I'm looking right now, I'm using daily basis. So if you use line charts, you would know what the price was of this asset at the end of a day, at the end of your basis. If it's an hour, you'll be at the end of the hour. However, in case of candles, which look like this, they give me more information. So let's go back to the slides. Here we see the opening price in a given time. In our case, one candle represents 1 day, and the closing price at the end of that day. Also, it gives you the info of how the price was deviating during that 1 day by looking at the daily high and daily lows, here and here. Also, as you notice, green candles represent price increase. Closing price is higher than the opening price. We can call this candle a bullish candle. On the other hand, red one is a bearish candle, which represents price decrease during 1 day. Closing price is lower than the opening price. Alright, so let's talk about trends. We can divide them on 3 subcategories. Long-term trends, where you would use weekly or daily basis to determine the trend, and you would probably want to consider or look at least 1 year of price action to draw that trend. Midterm, you would consider weeks or months and use daily basis as well. In case of short-term trading, you would look at maybe hourly basis for the past few days or weeks. So let's go over here and let's look at this chart. Let's try to draw a trend. Here I'm using a TradingView platform, which is very useful and it gives you a nice features to work with. I highly recommend that platform and it's free. So let's look at the Ethereum to Bitcoin price action. So I usually trade all the alternative coins with Bitcoin. So I'm interested in Ethereum to Bitcoin parity, not Ethereum to USD. And most of the trading is done that way, where you go into the exchange and you have to have Bitcoin to trade it with some other alternative cryptocurrencies. So let's zoom out to see how the price was performing in the past. As you can see, the price has increased significantly from the beginning of trading to a recent price, which gives you an idea that the price has been pretty bullish in the past. Now, if you want to draw a long-term trend, you would have to look at the price lows. Here, maybe here. So what I do, I select a drawing tool and try to spot some nice low points that can be connected with the line. Here I have found 4 low spots that can be connected with a single line. Usually you just need 2 low points to determine the trend, and the third one is just to confirm your trend. So what does that tell me? Well, if I see the price to break a trend, aka when the entire daily candle is opened and closed below the bullish trend line, I would assume a potential price trend reversal and maybe sell my asset or portion of my asset if I have them. Also, it can help me in figuring out the best entry point if I'm interested in buying that particular asset. So if I see that the price is getting closer to a trend line, like it happened here, I would accept it to bounce back up of that trend line. When I see a strong bounce up and it is confirmed by volume, which about volume I'll be talking in another video, I would buy Ethereum to hold it in the long term. There's no way for me to prove it, but this is actually what I did back in December when I purchased Ethereum for the price in that range. Now, in the case of downtrend, as you can see it on a shorter time frames, maybe here, I would like to draw a trend line by picking the highs. This is the same idea. Basically, I pick a drawing tool and I try to spot a nice trend by picking 2 or 3 high points and connecting them. In this scenario, if I will see a candle or 2 candles that are significantly closed above this trend, I would buy this asset for maybe a swing or short-term trading. Obviously, you can use different basis like hourly charts if you are interested in some swing trades opportunities, and you would trade that asset accordingly to the trend you have spotted. The key here is consistency. Long term, I always use daily basis. Short term, I always use hourly basis. All right, as we have covered basic trends, let's look at the channels. So let's go to this tab. Here I have drawn two channels. One is a long-term channel that is currently happening, and the other one is short-term channel that happened in the past. I have done it by simply copying the trend line, and shifting it up to see if the price is moving in the channel, trying to find that channel. Sometimes prices don't move in this kind of behavior, and you have to be careful in spotting it. So now, as you know, I have purchased this asset at the bottom of this channel, of this long-term channel, and I'm hoping that sometime in the future the price will move to the upper part of the channel, to the upper bound, so I can sell my position. This is not guaranteed, but the price will bounce down from upper bound of the channel, but I believe we can see some significant resistance in the future when the price reaches that point. So what would I do? I would sell some portion of my portfolio over here or maybe there, we don't know exactly where, and carefully watch the price action in the next few days in the future. Because if the channel is broken up, this will be good for you, right? You don't want to sell if the channel will be broken up. You don't want to sell entire position. And if the channel is broken up, this may result in a new all-time highs and maybe an exponential price movement. However, this is not always the case, so be careful. And here, as opposed to bullish channel, bearish channel work kind of the same, and they could be a great opportunity for short-term trending. Let's zoom in a little bit. So what I would do is just buy low and sell high, buy low and sell high. Have a bearish price action can be more risky, in my opinion, in my personal opinion. All right, since we have covered trend lines and channels, I would like to talk briefly about support and resistance lines. This picture just shows you where the price action was finding some significant price action reversals. Like here, in this price range, the price action couldn't break down, finding a support or resistance in some time frames. Usually, when the price breaks the support, this support might be a new resistance level in the future and vice versa. So here, let's look at the NEO against the Bitcoin. NEO BTC parity. Those levels that I have drawn can be very important price levels that you would use to determine where to sell or buy this particular asset, which is NEO. So let's say you have entered the game over here. And over here, you would expect the price to bounce down. If the price level is broken, you could open a swing trade by buying it at that level and maybe selling it when it reaches this level. Usually, previous all-time highs are the key resistance to look for. Maybe if the price reaches that point, you would sell a portion of your portfolio and then carefully analyze price action for the next few days to see if the resistance is broken. If it is, then it's good for you, and it's most likely that it will reach a new time high. However, if it's not, then you would sell it and purchase at the lower level. Maybe this level, or maybe if it falls further down, then you would buy more at a lower level by cost averaging your position. I will try to cover this strategy in the next few videos. So basically you would purchase some over here and you don't know if the price action will find a support over there. Maybe it will break down further and then you will buy again at that level. So instead of buying at this level and losing money in the short term, you would cost average those. And your level would be, your price level that you bought it will be averaged to that kind of level here. At the end, I would like to mention few patterns that are usually commonly used, like head and shoulders, double top, bottom formations, cup and handle formation, triangles, or flags. I'm not going to cover them now, but in the future videos I will. Also, if you would like to go ahead and learn about them, this would be a good idea. If you would like to start learning about them, I would probably go into Investopedia or maybe Googling those patterns. Also, there are some indicators that are commonly used by short-term traders like RSI, Relative Strength Index, on-balance volume, MACD, DMI, or moving averages. But I think this will be enough for my video today, and I would like to talk about those indicators in the future. If something interests you, you can comment below and I will know what to cover first. On my last slide, I just want to mention some other important concepts that will help you understand TA. You should read into them if you have time, like Dow theory, Elliott waves. The last one is about efficient market theory, which opposes and challenges the TA concept. Wikipedia would be a good way to start.
Thank you for watching this video. I hope you liked it, and if you did, please subscribe my channel and I will see you soon in the next video.